And one. We are live. Hey, Mark, how is it going? Hey, Yusuf, how are things?
Hey guys, Charles, Mark, how you guys doing? I'm great.
Yeah,
Definitely.
great. Good to see you guys. Happy Monday. It's always exciting. Hopefully everyone's having a good Monday. Start out the week. I'm always kind of excited, especially in this space, Yusuf. It seems like the weekends usually aren't always too good in the crypto market. Obviously, I say being good, meaning if you're hoping for them to go up.
Right, sure.
Right? Even though these markets, so traditional markets, they work only about 6 hours a day, Monday through Friday, 5 days a week. These markets are 24 hours a day and they're global. So they don't sleep on the weekends, but they do seem to kind of have their own patterns over the weekends, right?
Yeah, of course. There's certain times where there's obviously more volatility and times where it's a little bit more dormant. So even though it's a 24/7 market, you're not really seeing a ton of activity 24/7 around the clock. So the weekends could, be up and down. So it's kind of interesting.
Yeah. So we never kind of know. A lot of times they maybe kind of go dormant a little bit over the weekend. Typically, they seem to go a little bit down, at least lately. I don't know if that's because people are doing all their trading while they're at their desk, or if the sentiment just goes down. They're not that interested over the weekend, so they're willing to pay less or whatever that may be. But kind of a little trend. I mean, we were a lot anyway. That's kind of my observation.
Sure.
What's interesting is I always like to say is that a lot of people think, oh man, the market went from 400 billion to 300 billion, like 100 billion just disappeared. Like everybody pulled their money out on Friday night and went partying or whatever, right? But it's
Right.
not that money got pulled out. Like 100 billion didn't get pulled out of the market. It's just the valuation of the market went down. So for whatever reason, people are just wanting to pay a little bit less for all those coins, Sunday than they were on Thursday or Friday. So it's the valuation that changed, but not actual money disappearing.
Very good point. Very good point.
Right. So, I kind of use an analogy kind of like a car where it's like, if I had a car that was for sale for $10,000 and somebody showed up and they're like, ooh, it's kind of scratched up or it looks like it was an accident, I'll only pay 8,000 for the car. So it's the valuation. They just want to pay less. And the opposite would be if three people showed up and, oh, this car is awesome, I'll pay 12. Oh, I'll pay 13. I'll pay 14. Now the value went up. And it's all off perceived value or sentiment, right? If they feel good about it, they pay more. If they feel bad about it, they pay less. And that's kind of where we're at with the crypto prices. Right. It is interesting to see how the entire market can move simultaneously. So that's a phenomenon that most people can't seem to figure out. But any case, over the week we've basically gone nowhere again. A week ago today we were at 326 billion. We popped up to a high of 356 billion, and we're down to back down to 310 billion. So kind of range bound. That's for the market, not individual coins, but kind of range bound. What I talk about, trading sideways, kind of in this consolidation pattern. We have Yusuf on today, which is a much different approach than I take to the market. So it's good to have kind of some opposing, not opposing viewpoints. It's just different strategies. Not that we don't agree. It's just we just choose to employ different strategies, and so there's always a time and a place for that. For me, being like a really long-term fundamental investor, these markets get a little boring. I've been a professional investor for a really long time, and I can tell you that a lot of times the best thing to do is nothing. That's also a lot of times the hardest thing to do is nothing. And so doing nothing is doing something, right?
Absolutely.
And so, I'm not going to sell, and I'm not expecting it to do much. So, I've done some additional research. I've stayed up on trends. I've looked over my portfolio, maybe decided how to move things around, what I want to do when it starts taking off, things like that. I stay busy. Whereas Yusuf, you can really get in and kind of play that volatility, right?
Yeah, of course. And I've heard you have a little bit of a technical expertise as well, Mark. You have a reputation out here.
Yeah. So like I said, we don't have opposing viewpoints. I'm sure we would agree on trading the market or investing in the market. It really comes down to strategies. And so that's the one thing that I just want to just always constantly reinforce to everybody is you have to have a strategy, right? If you don't have a strategy, you're going to lose. You're going to lose. So you need to have an investment strategy. So that's like my asset allocation. How much of my total assets do I even want to put into crypto? And then of what I decide I want to put into crypto, how do I allocate that? So for myself, I do some trading, yes, and typically I'll take about 10% of my total crypto portfolio into a trading portfolio, and I'll actively trade that in a good bull market because I don't have the time to trade it on a full-time daily basis like you do. So I want to do kind of a little bit more momentum trades, swing trades, where I can kind of do once a day, every couple of days. So I typically do those in bull markets. So I'll maybe take 10 or 20% over and I'll just kind of do that. But again, it's a strategy that works for me based off of my time, my comfort level, et cetera, right? But for you, you look at the market differently and it's not wrong or right, but you have your own strategy.
Right, of course. And, that's a really good point that you make. And I kind of echo those same sentiments when talking about people that are hodlers and they're fundamentalists. I don't think it's a time for anyone to panic. And going back to your analogy, I even liken to if you have a Ferrari that's $500,000 and that Ferrari suddenly on sale for $250,000. Like, do you panic and burn your Ferrari, or do you buy another Ferrari? So, for the people
but the answer to that question though is it depends. If somebody knows the car market and knows that Ferraris hold value and that Ferraris will typically hold that value and be worth more in the future, then I can hold. And that's one reason why I really dig deep in research and provide research, because if you don't understand that asset, then you don't know, oh, shoot, the price is dropping, I'm out of here. But if you understand the Ferrari market and this Ferrari is a collector's edition, it's going to be worth more in the future, then you have what it takes to hold, right?
No, absolutely. I mean, and you've made my point. Is that if you understand cryptocurrency, understand Bitcoin, and you came into the crypto space for the right reasons, like these markets you really shouldn't panic or be that concerned about. Me personally, I get more bullish in these markets in terms of, or looking for bullish opportunities in terms of buying and holding. But with crypto, even though the volatility is down as of late, it provides so much opportunity to, in my case, trade. And for those that are looking to, buy and hold, that they could do that at some really great prices. So I know there's a lot of people panicking right now. I've seen comments and threads where people are asking, is it time to liquidate everything? Is it time to, panic? I think that if we see a further decrease in price, honestly, it is to drive that panic. And there's going to be traders like myself that capitalize off of that. So for those that are in crypto, I would just, and not financial advice, but I would just suggest not to panic. And, within the next few months, I see us getting out of this. And then to comment on your other point is that we're actually, we have been ranging up and down a little bit, but we're actually in a little apex. And I'll show what that looks like. So we're going to see a breakout, and it's going to happen soon. And that's going to be really interesting. So I'll demonstrate that soon as well.
Okay, so real quick, before we start getting into the technical stuff, I think let's do a quick fundamental update in terms of where the markets are going. So, yes, the ticker symbol of, Bitcoin and the market hasn't really evolved. But I think it's worth noting that fundamentally speaking, we continue moving forward, right? I think last week there was a bunch of stuff. There was the G20 meeting. Did you follow that, Mark, at all, or did you?
Did I follow it? Of course, I was glued to that thing. Sure, anything big like that, I'm all over. Whether it was the CFTC and SEC, before the Senate, or the G20, which is even bigger. Yeah, for sure. So, there's two ways again, right? They're different strategies, but like for me, trading gives us a lagging indicator, tells us what happened. Based off of the patterns, it tells us what may, likely scenarios in the near future. But I believe to really tell the future, 6 months, a year out, you have to look at the fundamentals, right? And so people, and I always say, I'm guilty. I say all the time, people want to know, is it going to dip again? I'm like, I don't have a crystal ball. But I believe when it comes to like looking 6 months, a year out, there is a crystal ball because you can look at the rules and regulations that are being passed. You can look at money that's being invested in the space. And so it kind of tells you what's happening. So back to Charles and talking about the G20, it was, there was a lot of FUD, right? Fear, uncertainty, and doubt as to what may happen at that meeting. But it actually was super positive. And actually, a bunch of countries kind of came out straight up and just said, no, we don't want to regulate it. We want to leave it alone. I was a little surprised. It's such like the cryptocurrency market is a tiny little speck compared to the, global financial markets, hundreds of trillions of dollars versus, a couple billion. It's not even a speck, but but it's gotten on the radar of these guys because I think they know how big this could be, but they've decided to leave it alone. And they've even gone as far as to say that they didn't see it as a threat. And I think that's a little bit funny because it is a threat and they've recognized it as being a threat. But I think what happens, like Kodak, the film company, 150-year-old company, within a couple of years, boom, they're gone because of digital cameras and they just slept on that technology. And so, the bankers better be careful. They're going to sleep on this. And next thing you know, it's going to be big. But anyway, back to that news, they said, hey, we're going to leave it alone. We're going to let it flourish. We don't want to, over encumber it and whatnot. So for me, from a fundamental viewpoint, that's super bullish as to what's going to happen over the next year.
Yeah, I think that was the thing. I think what stood out to me was the fact that there was an issuance stating that the recommendation is, I think people are going too far on the regulatory side. I don't know if you caught that note at all or anything on that side, but there was, I don't know if a warning might have been too strong, but there was a comment or a report saying, people are going crazy on the regulation side for this stuff. And, we definitely need some regulation, but like the pendulum has swung now too far here. And maybe there's probably a better middle ground. And I don't know if you saw that, but, I noticed a few things, now I think I read something that both Korea and China are looking into things, specifically Korea, because did you hear about that, Mark, over the weekend with Korea?
Korea what? I don't know what you're talking about.
So
what?
Korea
I'm sure I did, but.
So Korea on the ICO side, Korea is obviously one of the strongest markets, and they've been clamping down. And let me go pull up this piece of news, Korea ICO. Basically, because of what was going on and everything, one of like the largest companies in Korea was looking to move abroad in terms of like moving to a different country just to issue their ICO because the regulatory side had just gotten too rough. And now with that, they're kind of saying like, oh crap, we've been clamping down, but if business starts leaving our country, that's a bad thing. And, expanding on that, Malta is like trying to establish, they're trying to compete against Puerto Rico. And
Gibraltar is the destination everybody's going to right now.
Is it Gibraltar? Well, I read something about like Binance is moving to Malta, because that's like, your new Switzerland of crypto or your new Switzerland of blockchain on that front. So I don't know if you've been seeing any of that stuff or anything on that, but like I keep looking at all this stuff, and definitely there's a short-term FUD coming in. But if I keep looking at these long-term trends and the regulation is moving, it might not be moving as fast as we'd like, but it definitely is moving.
Yeah. And I think, I've said a bunch of times, and I know it's alarming to some people when I tell you that it's like, I believe the industry needs regulation. I then have to back that up with saying I don't believe that the government's the best person to do the regulation. I'd like to see it be kind of self-policed and regulated, but there's a lot of bad actors. But ultimately, I believe that the mom and pop crowd fund, the individuals, you and I, we've taken the market as far as it's going to go. Like 800 billion is probably the biggest we're going to see off the backs of individuals. we need the institutions. I mean, just consider these numbers. That last year, the in 2016, I don't have the data for 17, but in 2016, ICOs were like $2 billion ICOs, where IPOs were almost 1 trillion. So we need that $1 trillion to come into the market, and there's just no way it's going to come in until the regulations have changed. So, but they're coming. I mean, SEC, CFTC, FinCEN, they've already said what they're going to do. It's not that bad. I think everybody's ready. All the Wall Street, if you want to call it that, they're ready to come in. And we're just waiting for a couple of pieces to drop. So for me, long term, I see over the next couple of months, this is all changing. This money is going to start pouring in. Like Yusuf said, probably by the summertime is kind of what I'm thinking. It's going to start coming. And by the end of the year, this market's going to be massive.
Nice. Hey, did you get a chance to read that U.S. Senate report thing that I sent you last week?
I did. I did breeze through it. I mean, there was so much stuff. Obviously, it touched on every single topic, not just cryptocurrencies. There was a lot there.
Yeah. I'm curious to get your opinions on, so I don't know if you heard, you probably didn't because you don't look at this stuff. But on the fundamental side, I think it was like the U.S. Congress or the U.S. Senate report actually devoted, they do like a state of the economy, every year. And they devoted a whole chapter, like 30 pages specifically to blockchain on the front and everything. So I'm curious to get your opinion, Mark, on what you thought of that. Like, is the U.S. going to get left behind? Are we going to, stay on?
So again, being a long time investor, a fundamental investor, I've been studying financial markets, not just crypto, but all financial markets for a really long time, well over a decade. And part of that has a lot to do with looking at policy and regulation, because those are the things that drive the future of the market. And so, unfortunately, I am a little bit concerned about that. So we have the U.S. passes laws, and then there's a lag, there's a delay, and then there's massive policy shifts. So, for those of you guys that don't know, the dollar is the world reserve currency. So the dollar is used globally, and all settlements, all banking settlements, so it doesn't matter what country you're in, all banking settlements happen through the Fed, through the dollar. All commodities, oil, gold, et cetera, get done in dollars, et cetera. So as of, 10, 15 years ago, like 95% of all transactions and settlements happened in dollars. But because the U.S. continues to pass these crazy policies, for example, it was probably 8 years ago or so, they passed one called FACTA, and it was actually the IRS is passing a policy that says all the banks in the world have to report to the IRS. The IRS is just a private company, not even the government technically. So they're saying, hey, because you settle in dollars, we require you to file with us against, taxpayers' information. Now, what that's done is now a lot of countries are like, okay, then we're out of the U.S. banking system. If you have a U.S. passport, you're not allowed to even open a bank account here. And now today, the dollar settlement's down to about 60%. So we're actually, the more regulations and control the U.S. tries to put, the dollar is losing dominance. And so now we're about 60%. So anyway, back to this question about cryptocurrencies, I believe that if they continue to get draconian in their measures, yeah, it's going to leave, right? It's going to go to Malta, going to go to Gibraltar. And really my fear, and I've seen bills from like Dianne Feinstein and, other representatives in the United States, and there's bills that are being passed right now where they really want to get into this regulation and like reporting. And I'm just afraid that we could stifle the growth and possibly send jobs elsewhere,
Yeah. Well, I mean, Binance is moving, I think I read the article, they're moving 200 to 300 people over to Malta. So, that's the start. Pretty soon you'll see ads. It kind of reminds me, I live in Illinois, and, we have we've had some pretty poor tax policy over the last couple of years. So you've got Indiana across the way who's been advertising saying, hey, move to Indiana, you'll save 5% on state taxes, your property taxes will be cheaper, your sales tax will be cheaper, blah, blah, blah. So I guess when we start seeing those advertisements, then we know there's probably more problems out there.
Yeah.
So, yeah, continuing on, I guess. Any other fundamental updates or anything worthwhile to talk about, Mark? You think that's noteworthy or newsworthy?
Well, some things that I've been seeing is I've really noticed like FinCEN, which is the financial crimes, division of the United States, and they've started to get pretty active in the space, as well as the SEC, the CFTC. Everybody's kind of fighting over like who's going to control what, and really they're even fighting over what the classification is. Is it money? Then it's FinCEN. Is it securities? Then it's SEC. Is it commodities? Then it's CFTC, right? So everybody's trying to figure out who's going to control it. But one thing that I've noticed is that as FinCEN is getting more and more involved, and we saw this specifically with Donald Trump coming out and saying, well, the Trump administration, I should say, came out and said that Venezuela-backed Petro coin, U.S. citizens can't buy that coin, can't own that coin, can't trade on that coin. And what they're doing is the Office of Foreign Asset Control basically said that they consider digital currency like other currency, like money, and that they're going to start blacklisting individual accounts, or I should say addresses, wallet addresses, to make it illegal to transfer to or from this blacklist of addresses. And so that's a policy, right? That's a regulation. And then I go, okay, what does this mean and what will this do in the future? So right now, most of you guys probably know, I can open up a wallet, and every time I open up a wallet, I generate a new address. Well, they're not going to like that. They're not going to like that I can generate an address all the time, which means there's probably going to be policies coming out against that, where we've already seen the SEC says they want to start regulating exchanges and wallets. So probably part of that regulation will be that these wallets can't generate addresses on demand anymore. And so where I think that goes is then I think, our thesis on privacy coins really gaining a lot of momentum this year is not just holding true, but even bolstered. And I think we're going to see a bigger push towards that.
That's actually kind of interesting. So obviously we know exchanges are coming, but if they started regulating wallets, I mean, that's the secondary side, right? So I guess there could be decentralized wallets, but imagine if like Trezor had a report every address. Is that kind of what they're moving towards, or?
Well, I think for now it would be like probably ones like in the App Store, right? And then and then even your exchange technically is a wallet, right? Because that's where you store it. So a lot of exchanges still give you different addresses and whatnot. So I think that's going to be the first point that we see. And the problem is it's a real slippery slope, because what happens is let's say that a coin comes from that blacklisted address to a non-blacklisted address, and then it comes to me. Well, that coin is technically tainted now. And potentially it's a slippery slope. This law could go so draconian where they're like, hey, any coins that are even tied back to this blacklisted address are now blacklisted. Your entire account's blacklisted and shut it down. So we'll start to see a market of clean coins. So mined coins are brand new and clean with no history. Otherwise, all coins, people think it's anonymous, but it's not. Like the blockchain is the perfect ledger. So you could track that coin back forever. And if once it's tainted forever. And so clean coins, mined coins will probably start to fetch a premium. There might be a gray market for like tumbled coins. It's interesting. We could talk about that for a long time. But my point is there's a statement from the OFAC, the Foreign Asset Control, saying that they're going to start doing this. And where does that go? So fundamentally, I think privacy coins look really good this year.
That's actually kind of scary if you think about it, because, I don't know how it would work on the coin side, but I have heard, right, if I have an account and some dirty money gets into my bank account for whatever reason, whether I knew it or not, at that point, law enforcement has probable cause to, investigate further. And I've heard anecdotally, again, I'm not a lawyer here, that they could actually, seize assets or things like that. Like if they think that, your bank account, let's say your bank account had $10,000, but like $1,000 of it flowed through to go fund the Syria insurgency or some other thing. They can lock all that stuff down.
I mean,
So
theoretically, it could get to that point. Obviously, it's nowhere near that point
yeah.
today. And the argument is well, dollar. I mean, the dollars probably followed the same path. For sure, cash. I'm sure cash in my wallet probably was in some drug deal or who knows what, right? So cash and even digital money, like in my bank, who knows? It's just that with, like I said, the blockchain, it's a perfect ledger. So now
Well,
we can start to track
that's
that.
what I'm saying, because the cash, maybe, it went through Syria or whatever, but it's been cycled through. That was a year ago, and now the dollar is back over here. But with a Bitcoin, it's wherever it goes, it's there. So yeah, no, that's wow. Yeah, that's kind of concerning.
So Yusuf, what I do is I look for things like this, and then I go, okay, what does this mean? What does it mean for the future? And really, I try to spot a trend, identify who I think will be the biggest recipients of that trend, jump onto that train, and then I just sit back and wait, right? And I did that through the internet boom. I'm old enough to have just experienced that, and kind of this as well. So I know that's quite a bit different than what you're doing, right? So you're kind of looking at it on a daily basis, and maybe you don't care so much about the underlying fundamentals.
Well, it's not that I don't care about it. It's that as far as the fundamentals, there's a big divergence when it comes to technical traders and fundamental traders. Fundamental traders obviously have a strong opinion, and technical traders the opposite, in the sense that on the technical side, we believe that anything regarding to news, events, policies is actually going to show in price before we find out about it. And like, for instance, this meeting that you guys referenced in regards, I think like the C2O meeting or something. What's it called? Charles?
G20.
It was G20. Yeah.
So when Charles and I had a discussion, I said, Charles, Bitcoin is going to 7,200, and then it's going to get the most significant bounce from 7,200. That was right on par with the G20 meeting. And the G20 meeting didn't drive price beyond any significant resistance levels or barriers. So if I was to give any credence to the G20 meeting, then Bitcoin would have to have reached $10,500, $11,000. But just from the pure technical side, Bitcoin did nothing outside of what it was already anticipating doing. So it's interesting how fundamentals and technicals can kind of align, because I had no idea about the G20 meeting until Charles mentioned it, and it happened to be right at those same particular levels. And I make that argument on another end, because whenever I believe institutional money drives the market, that's why we can have a fundamentally bullish Bitcoin, but a lower price. Take everything, put blindfolders on right now, and just listening to all the news, and you tell me what you think Bitcoin's price would be. I can almost guarantee you would tell me above $10,000, and me included. So we have divergence there, because if we just look at all of the bullish sentiment, not knowing anything, given Bitcoin's history, my assumption at this point, had I not seen a chart, was that Bitcoin was at least above 10,000. I would even guess above 15,000. So institutional money drives the market. Institutional money always shows their hand in price before news is released. So we can see things in price when the market's moving sideways, when it's consolidating, like little things like that, to where we have clues on the technical side. And then when we see potential setups for a breakout, for instance, a day later or hours later, we'll see something on the fundamental side to support it. And that's going back to the G20 meeting, for example. So
what's interesting about that is that with trading, you're looking at those technicals, and it kind of gives you like an either or scenario, right? Like, hey, if we're in this range, and if it turns to the upside, then these are the next resistance levels. But if it turns to the downside, these are the next support levels. So it kind of gives you like this either or. So then, like, going back to what you're talking about, like the G20 meeting, it's kind of like, ooh, the market's kind of pricing this G20 in, and if it's favorable meeting, it could break to the upside, and if it's a negative meeting, it breaks to the downside. Is that kind of what you're saying?
Yeah, well, so in that particular event, what I was looking for, I mean, we were prepared for the bounce. The bounce was coming. But what I was looking for to see if this G20 meeting really had a real impact on price, could we break the next barriers? So fundamentally, if we're just talking fundamentally, even if you got in Bitcoin at $19,000, you're fine, in my opinion. If we're just talking fundamentally. Most people, I don't think, have the luxury to buy, Bitcoin at those type of prices and just hold for whether it's financial reasons or whether it's they're not mentally fit to kind of weather those storms or weather the down markets. But fundamentally, of course, how can I argue with Bitcoin being bullish? But I think time being the greatest asset is really why I favor the technical side, so that we can kind of curve those time periods and get in at the sweet spots. So that's really important. So I don't see Bitcoin's price matching the fundamentals unless there's some fundamentals I'm unbeknownst to that are bearish. But what I've been hearing of late, with the exception of that Mt. Gox Bitcoin guy that has all those coins, everything else, what I've been hearing has been pretty bullish. So, I mean, this price, I'll be really interested if there is a fundamental reason why we're seeing lower prices.
Right. Yeah, I agree. The fundamentals are all there. I mean, there's no bad news. All the news that's come out is good. It's strong. A good majority of the smart money people all agree it should be much higher. So, yeah, I agree with that assessment.
Cool.
But one thing that you said though was you talked about time frame and people's mental capacity to hang on, and so really it kind of comes back down to that strategy, which is your time frame. So for me, it's like, dude, if Bitcoin hit $50,000 or $5,000, I'm not going to sell either way, because I'm looking a year or two from now. But that's my strategy. For you, your strategy.
A disciplined investor, though.
I know. I get that. But so the way that you can do that, well, I've lived through, unfortunately, I believe some lessons in life can't be taught, they can only be learned. And I've had to learn this the hard way, unfortunately. But you can also, people can do this by approaching it, knowing that, hey, this is my time frame in 2 years, I'm going to hold for 2 years. But also, they should really only invest $200 or $400 because, or whatever that number is for them, because if I lose $200 or 400, if my 400 turns into 100 or $80, I don't really care. I can hold on to that, but it's when people are putting in my whole savings nut, and then I see it, then mentally it messes me up.
Exactly. It becomes an emotional event. I think like one of the dangers in crypto is that it's made too many people wealthy too fast. I mean, these type of volatility and movements in the market in crypto, I have never seen in any other market, me personally.
Yeah, for sure.
And that's the lure. So it's
but also that's interesting though, Yusuf, right? Because that's also what makes the market super volatile, right?
Absolutely. And see, people don't understand that it works on both sides, but with that lure, with that appeal that, hey, you could invest $100 or $1,000 and that $1,000 become 100,000 or 50,000. When people see that movement on the upside, they're going to jump in wherever they feel like they can get in. That's why what you guys is what you do is very valuable, so that people have an idea of, what the market sentiment is and when to buy. But they kind of throw caution to the wind just because we've seen so many gains so quickly over a short period of time.
And they have unrealistic expectations.
Absolutely.
So that was one thing I wanted to talk about today, actually. So, I pulled up a couple just stats. So it says the average annualized total return for the S&P 500, so that's the traditional stock market, over the last 90 years. So the average per year gain in the stock market over the last 90 years is 9.8%. That's for a year. So it goes up 9.8% over 12 months. I mean, we see 10% moves a day.
Exactly. Easy.
And actually from March of 2000 till July 2016, 16 years, the average return was less than 3% for a whole year. So that's the market that I'm used to living in. And I don't like the stock market. I've been in non-traditional investments, so I'm looking like I get into oil fields or emerging markets because I don't like 3%. I want 30% or 40%, but I'm used to 30 or 40%. But people getting in, like you're saying, Yusuf, like these new people getting in, and they're like, oh, I can make 500%, and I have to hear these people, man. It drives me crazy. Where they're like, people were telling me Ethereum got range bound at the 350 range, and they said, oh, Ethereum's it's boring. I'm out of here. I'm like, it's gone up 5,000% this year. How is that boring? Well, it hasn't done anything. It hasn't done anything for 2 months. I'm like, 2 months. Like, so. I like to give people perspective so they can get that get that right mindset. So 9% a year is an average, and so if you can do 30-40% in crypto, and that's why I like to give a portfolio where we'll get some 500, some 1,000% winners, but we might also have some losses. But overall, that portfolio is going to do so much better than any market ever in the history of the world.
Yeah, absolutely. I mean, you really hit the nail on the head. I mean, cryptocurrency, people have lost so much perspective. It's almost comical. I used to say cryptocurrency is the only place where you can make 20% in a week and it's a bad week. like the perspective is so lost in context. And going back to your point where people think they can make 500% in a year, the scary part is they actually can. That's the scary part. But, that shouldn't be the what you're chasing, and that's what's unfortunate. People are chasing that. So there's many instances where people have seen those things through strategy, through diversification. But by any measure, if you're doing 20, 30, 40, 50% a year, that's fantastic.
It's like you're getting on CNBC and talking about your returns, right? Although I do want to say, I mean, our portfolio did 7,000% in 2017.
That's amazing.
So I'm going to throw that out there. So if we could do a couple 100%, I would be happy as an investor. But we clocked 7,000%, which is amazing. But back to your back to the first point was all these new people getting in with unrealistic expectations is what creates the volatility. And so how that works is that as things are going up, they all want to jump in, which pushes it up even farther and faster. But then the converse is true, is that once it starts dropping, because they didn't really understand what they were getting into, then they start getting out, which pushes the prices down. So now it goes up faster and it comes down faster. Whereas in traditional markets with more seasoned investors, they hold. They're like, we know how this goes. And so that's why they don't see as much volatility, right?
Of course. And man, you're speaking a lot of truth. The thing is that institutional investors, their money is in now. If Bitcoin slides some more, their money's going to be in more at 5K, at 3K, at 4K. I mean, the silence that I see in some of these crypto groups, it's like I shared with you guys, is really deafening. It's the passion isn't there. The hodlers, they went home. Everybody's, they hit the hills. But this is the time where people should be most excited. And I seen a meme online. It was, everybody wants Bitcoin to crash until it crashes. It's like, this is romance of this self-thought of awareness. Like, oh, if Bitcoin does this, then I'm jumping in. Well, Bitcoin is doing it. And where is everybody?
Yeah, no, that's definitely the truth. So speaking of which, I think it's not time to wrap up, but let's talk about some forward-looking. I like having you on, Yusuf, because you can give the whole micro viewpoint, right? So we're in a new week. We thought we might, we were in this no man's zone. I think this morning, let me look at Bitcoin. I think Bitcoin's down a bit, actually. There's a little bit of instability this morning, and I think it broke a Fibonacci or something. Or whatever. I don't. It broke one of those lines that you talk about, or it's getting close to it. You want to maybe talk a little bit, or do you have anything? Where's Bitcoin going to go from a technical side this week? Any thoughts?
On the technical side, all engines are still bearish, meaning that means it has more room to fall down. And I can't stress enough, and to kind of lean on what Mark shared, just because the price is falling, it doesn't speak to the value or doesn't speak to the long-term projections. So institutional money, which I believe is what drives Bitcoin, is going to return, and new participants are going to come into the market. But as of right now, I'm actually shorting it, meaning I'm taking a sell position in anticipation for profits, because I think Bitcoin has a lot further to drop. There's been a lot of sideways movement. Even as a technician, some of the things kind of faked me out a little bit, but I think it still has a lot of potential to drop down. 7,200 is the level that I'm paying attention to now. If we break 7,200, then I'll be looking at 5 or 3K if we break 7,200. 7,200 is the last show. If we break that, 5 to 3K becomes my next targets. And guys, it doesn't even matter. Like, it doesn't matter, because if we get to 5K, which is 3K, we're not going to be there long. I promise you, there's going to be a news release that happens to hit right around those levels. And we're going to see some consolidation for maybe another week or two. Well, not even a consolidation. It's an accumulation period where institutional money starts to pour in, and then we're going to break right up to the upside.
Or 8,200 holds and we bounce to the upside.
Or that's possible as well. But right, we're at 8,000 right now. So this is tomorrow is what we call turnaround Tuesdays. So Bitcoin has until tomorrow to turn around. If it doesn't turn around by Tuesday, Wednesday, yeah, we're going for another swim. But it doesn't, it's an opportunity for those that want to enter the market at a better price. It's a great opportunity for sure.
For those of you guys that are kind of watching and aren't really understanding, I mean, kind of Yusuf and I, again, we agree on this. And I would imagine, I'd like to ask you actually, I mean, you talk about fundamentals. Do you have a portion of your portfolio that you're holding and you don't sell, or do you trade with 100% of your portfolio?
100% is technical, because
okay. So
I mean,
because he has a lot of skill in that, and because he devotes a lot of time to it.
Oh, absolutely.
I'm 100% fundamental now. Like I said, in certain markets, I'll move 10 or 20% of my total portfolio into a trading. But just for those of you guys that don't know and don't understand the differences, I'll just use an analogy real quick. So I like to kind of think about like real estate. So from me, like a fundamental investor, imagine like real estate where like, oh, I heard in Daytona Beach, they just passed the zoning where they're going to build a brand new conference center, a brand new international airport, and all these things. Within 5 years, that's going to be built up. Well, I might want to go in and start buying up these old buildings around where they're going to do that development, because I know in a couple years, that whole area is going to be revitalized, right? So I see value. I know I have to wait a couple years, but I can get in now, right? That's like a real estate investor. But then some people like to fix and flip real estate. Hey, look at this property. I can pick it up for 50 grand. I put 10 grand in. I can sell it for 100. And they just want to buy, flip, buy, flip, buy, flip. Now, those are just two different strategies. Now, the fix and flip model requires full-time effort. I have to constantly be searching. I have to hire construction crews. I'm managing that, but I can make 30, 40 grand. Boom, 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 right? It's kind of like an active role, and it's like an income role versus like, oh, I'm going to buy this property, sit on it for 3 years, and then I'll wait till it's worth more. So it's just two different strategies, and it just kind of depends on where you sit, right? Is that kind of how you see it, Yusuf?
We have a running joke, Mark. We say fundamental investors are lazy investors because they can't. But I say that to lead on to your example, and I'm just teasing, but to lead on to your example, when you're buying those properties, I'm looking at those properties and they're also rat infested, and I know they have terrible tenants, and I know the landlord's going to be in a pressure sale situation. So I'm going to give it another week, and I'm going to come back and I'm going to offer him 50% of what I would have offered him last week. So like in Bitcoin, for instance, I can't stress enough. I own crypto and I am a crypto enthusiast, but I'm also informed. So I bought Bitcoin at 1,700, which I came to crypto late, but I bought Bitcoin at 1,700. I sold it around the highs, like around 18. I bought it again at 6,000. That was also in the group. I sold it around 10. And so whatever happens now, if Bitcoin was to break out at 9,500, for instance, I still get in cheaper than what I sold it. But I think it's going to drop some more. We're at 8,000 right now. So if it drops down to 5 to or 3K, I'm gonna buy it again.
Tell us what you see in the charts that make you think it's going to turn down to 5,000.
So it's all about probabilities. So I shared this with with Charles. It's not even about what I see or what well, maybe so what I see, but it's not really about me personally, my opinions. It's really just about what price paints. So price paints a pattern that I know for a fact is 80% or 78% likely to give us a bearish movement. Then I just move with the probabilities.
But how do you get the 80%?
So for instance, like we have like a falling wedge, for instance, or in the pattern that I shared with you guys yesterday, we were in an upwards wedge.
Oh,
and
hey, Yusuf, could you share your screen, or is that something you could pull up? So
let me hold on one second. I'm gonna show you guys. Let me just draw this thing out real quick. So and I've shared similar things as such in the groups, but I'm gonna draw something real quick for you guys.
I mean, you don't win them all, but you do seem to have a knack for calling a good percentage of your trades. So.
Yeah, I win most of my trade, but you know, it's really just about risk management. So when I do lose, I lose a little bit. I win more than I lose, and when I win a lot. So that's where the account growth creation is.
And that's a core investing principle. So whether you're long-term investing or short-term trading, it's still about risk management, right? It's all about risk and reward setups and ratios. So just want to bring that to attention.
Absolutely.
And so you don't have to win them all, right? So typically you're going to go into like on a long term, I want like a 10 times upside with like a 1 or 2 times downside. Maybe on a trading, you're looking at like a 3-to-1 ratio or something like that. So even if you have a 50% win ratio, you still come out way ahead.
Yeah, absolutely. And honestly, experienced traders, they enjoy, 70, 80, 90% win rates. I was very fortunate to get mentored by some 7-8 figure traders, and they really taught me how to read charts on a naked basis. I mean, without indicators, oscillators, none of that, moving averages. I don't need any of that stuff to read a chart and get an idea of where price is going. And that's where the power is. And if people could just get a better just overview on the technical side of what price is doing, it will help a lot. And to use Charles as an example, he bought Litecoin at 220, Charles?
I came in a few spots, but it was between at the highest at 220 and 205 this last tranche. But I did sell a bunch at 370, so I'm not totally.
That's awesome.
Yeah. Let me just footnote that with in the Jarvis portfolio, we put a buy at 50. And we sold at like 365, and
nice.
There has not been another buy order issued. So let me just put that.
And that's awesome, and that's awesome. So all in all, still did very, very well. And I believe Litecoin has the potential of breaking $1,000 this year, maybe even upwards to $1,200, $1,300 this year. Litecoin is actually a little bit more bullish than Bitcoin, which is a little surprising. So wherever you bought in, Charles, I mean, you're fine. I'm sure you know that. But I'm pretty sure you would have liked to buy it at $90.
Well, of course. Well, I would have liked to have bought it at $90.
No, I'm saying if Litecoin goes to $90, if Bitcoin goes to 3K, Litecoin is going to 90 or less. So it's very, very well possible that we could see those type of prices, which is great. I mean, for everyone involved. I know it might not feel that way because we're living the moment. And the same thing I share with you guys is like, in regards to context, it's like, guys, I mean, we flew to 20K in less than a year, and, we're still, 8K range. I mean, this type of bear market is so minimal. We can't wait 6 months, 8 months. It's really unfortunate. It kind of speaks to you as an investor more so than the vitality of Bitcoin. So, I mean, this is like no time as far as waiting out for an upturn. So there's really nothing for anyone to be panicking about.
No, definitely. Yeah. So let's take a look at the chart. We're all
All
ready.
right, so I drew a quick chart right here, something really simple. Hold on real quick. Let me share my screen. All right, so you guys can see that, right?
Mm-hmm.
Yep.
All right. So here we are in Bitcoin. And this red line right here, for those that are watching, that's the downtrend. And this red line right here that I have plotted, that's the uptrend. There's a little bit of slippage here where price broke through. So we're in this apex, right? So Bitcoin is getting closer and closer to the center. The good thing about the apex is that the closer we get to the apex, the more violent the breakout is going to be. So if we was to break out right here, then the upside wouldn't be that great. Same thing for the downside. If we broke out right here, where my cursor is, the downside would have been that great. So the closer we get to this apex, this corner, the bigger the breakout. So this is fantastic. Now, as far as the micro view, we got we had this in this green or blue circle or square. That's where our resistance is. And if you notice, we got two resistance, we fell, we got two resistance again, and it was a lower high, and we fell again. Not only did we fall, but we fell out of this little wedge that you guys see in these two parallel lines. We fell out this wedge, and then we retested the bottom of this wedge. So these two lines right here, we retested the bottom in this green candle. That's where I entered the market on my sell, and then we sold off. Where are we going? All right. So I see us coming back to this line. And honestly, if we touch this line again, it's kind of like playing ping pong and with glass pallets. So every time you hit the ball being price, you know, your pallet has a chance in breaking. So like every hit, your pallet is getting weaker. You know, it hit here, got weak, got hit here, got weak, hit over here. So the downtrend and the uptrend, they're both getting weaker. So now it's the downtrend's turn. We're headed down to the downtrend. I'm not optimistic that this large uptrend right here, this line, I'm not optimistic it's going to hold. And the reason why is that, and I could plot it, but this big, long, engulfing candle right here is very telling. That candle's letting me know institutional money wants to push this price down. And if we had a little bit more room, I would be a little bit more hopeful. But because we're so close, I'm not very and there's other confluences that I've shared in other videos with the descending triangle, with moving averages, with Fibonacci's. I'm just keeping it simple, and we're running out of time. So with this type of space that we have, we would need the bulls to show up and show up tomorrow. So, and tomorrow is Tuesday. So they have an opportunity to, you know, show us what they're made of. But as of right now, if I actually have my money literally that we're going to the downside. So it's not something I'm just saying. I put my money in the market that we're going to the downside. And if we get to this red line that we're looking at right here, a breakout to the downside is extremely possible. On the flip side, if we bounce, the breakout to the upside is going to be epic. It's going to be an epic proportions. I mean, we're going to fly. So we'll see how that works out. But for my long-term plot, what I shared with you guys before, I mean, I have to assume we're breaking out. The smart thing to do if you're not trying to trade, like trading within these little apexes, it's almost a 50-50 thing. But we'll know for sure when we get out of this thing one way or another. And it's not going to take very long. We're running out of time. I'm on the 4-hour time frame. So what is that? 17 days, the most, which I doubt. So I'll say a week, if that. I think we break out, you know, this week, you know, next week at the most. But we're going to see something for sure real soon with Bitcoin. I can promise you that.
Cool. Well, we're all counting on it, or we're all waiting for it, I should say.
So, but let's say, I mean, to be clear, you're saying something's going to happen. So that something can be it shoots to the moon, or that something can be it hits 3K, though, right?
Yeah, of course. So, see, if it breaks out the apex, now that we've dropped down here, I mean, I could still get in the market at 8,600, 8,300. So that's why I was saying the last video, it's like nobody has any reason like, oh my God, I need to buy it right now. It's like, even if it broke out towards the upside, you'll still have a great price opportunity to get in. You're not going to miss out on that much price. But right now it's favoring towards the downside. If we look at the daily chart, you guys can see we had this reversal candle here. And see, this inside candle right here is actually a neutral bearish candle. And then we got a bullish candle right here. And this is where it got me. I thought maybe, just maybe, this flat top would give us enough momentum to break this resistance. It pulled up a little bit, and it didn't, obviously, and fell back down. And this candle right here is the 1. This candle right here is the 2. This candle, whenever the 2 starts trading after the 1, that's your entry, even though I was in before that. But that's your entry right here. As you see, it's been a straight profitable move since then. And if you look at the weekly chart, it's even worse. So the
Yusuf, let me cut you off for just a second. I'm sorry. I gotta run. I gotta go catch a plane. Why don't you guys keep talking about these charts, because it's super interesting. I'm sure everybody's like really into it. I wish I could stick around longer, Yusuf. But yeah, I'm at the airport. I gotta run. So
yeah.
I'm sorry, guys. I wish I could have stuck around longer. Yusuf, great knowledge. Thanks for sharing. I'm sure everybody's super interested in that. I'm gonna take off, but I'll catch up with you guys a little bit later.
Awesome. Appreciate you, Mark. Thanks again.
Talk to you soon, Mark.
Have a good week.
So the last thing I wanted to share, Charles, is that we're on this weekly chart which just started this week. And unless this week just stays exactly where it's at, which is possible, but this candle right here is actually a bearish reversal candle. So on the weekly, which is a very credible time frame, it's telling us we're going to drop lower. So we're just looking at price action and where we are within the apex. It looks like this week is the week that we break on the downside. So my money's on the downside. For everyone else, I wouldn't panic. If you're not trading it, don't worry. We're not going to drop too far. We'll be back in the summertime and everyone will be Bitcoin hooray. So don't worry about it too much.
Oh, man, that's funny. Good stuff. Well, yeah, we are. Mark had a run, and it's about time to wrap up. So always a pleasure. Great catching up with you, Yusuf, and everything. And we'll stay on for – wait, what was the term for Tuesday? It's not Touchdown Tuesday.
Turnaround Tuesday.
Yeah, Turnaround Tuesday. We'll stay on touch for Turnaround Tuesday. We'll either be, high-fiving each other or we'll be buying. So one way or another, life will be good.
Exactly. All right, Charles. Appreciate you having me, man.
Great. Take it easy.
Later.
Bye-bye.